Hi everyone, welcome back to Be Rich. We have Anand with us again today, and we're going to talk about BlackRock's takeaway from the US earnings and what BlackRock has been saying. That US corporate earnings and the marginal outlook and the market dynamics of inflation and concerns. And then we're going to touch upon Japanese inflation and global yields. Then move on to stagnating US earnings and margins with labor cost inflation happening in America with resilience and spending power. Then topping it all out of the overlook and outlook, where the US earnings stagnation prompts careful monitoring of labor market dynamics and granular sector selection. And margin expectations may be optimistic due to wage pressures.
But this is ridiculous because they are saying something in the beginning and they are contradicting it.
Correct. So it's all covering your bases.
This is covering your bases. These kind of jokes is what one should be careful of. The point is, what they are trying to say is the American market is doing well. At the same time, it is not doing well.
Yes.
It is moving sideways. That means it's neither going up nor coming down.
Time is ticking.
Time is ticking. And then what they are saying is there is no enough workers, so therefore there is pressure. So basically they are trying to cover all bases. Basically they are trying to say if the market goes up, they'll show you 4 points. Market goes down, they will show you 4 more points.
Correct.
But the fact remains that they did not expect inflation to be so sticky.
Correct.
Which I have been warning. So inflation is extremely sticky.
I would say it's stuck.
It's stuck. And if you're tracking Indian pharma industries, you will know a lot of generic companies have gone bust in America because they have not been able to service debt.
No.
So the amount of bankruptcies are huge.
Yes.
That's why US FDA which is normally wants to meddle in all Indian factories, is clearing every factory. Because otherwise there will be a price rise there.
There will be a shortage. There's already a shortage.
There's already a shortage. So all this indicates to me that US inflation is stuck. Corporate earnings are not as bad as they are saying. What you have to adjust it is for post-pandemic surge. There's a surge after the post-pandemic. Things have normalized after that.
Correct.
So the decline is not because of interest rates or anything.
No.
It's because people have spent enough money and then there's a surge. And finally, American companies are not able to find enough workers.
No.
So the wage pressure on America is extremely high.
Yes.
And because wage pressure is high, you are going to have more people chasing the limited amount of goods and services.
Yes.
Now, what is not said there, what I am saying is, Chinese deflation is going to make things bad.
Even worse.
Because China's yuan will come down.
Correct.
They will send a lot more material into China.
Their export house will be stamping everything out.
That is a lot of US is going to import a lot more.
Yes.
And there seems to be no dampening of demand.
No.
Because they themselves are saying spending is resilient.
Yes.
Basically what means is there is no softening of consumer consumption.
No.
That means there is going to be no negative growth now.
No.
So unless you have 2 quarters of negative growth, you cannot have a mild recession also.
Correct.
So last quarter was very thumping growth.
Yes.
And if consumer spending is very tough, resilient,
yes,
you are going to have more economic growth in America.
Correct.
And more cheaper Chinese goods will mean more consumption. And all this means inflation is really sticky.
Very sticky.
And it is the impact of increased gas prices in America is going to come in next inflation reading. So even if the Americans decide to skip during the next Fed meeting, they decide to pause, they have to increase rate once more.
Definitely.
But I think they will increase it next time.
Yes.
And they cannot say this is the last. They said 2 small hikes this year. If this happens now, it will be 1 more hike. And they were saying prolonged silence and then we will see on cuts.
We'll think about it.
But I think that this will not be the last of the rate hikes.
I agree.
There may be 1 or 2 more. 1 definitely, 2 more. That means the rates from where they are now will go up by another 0.5% minimum, if not by 0.75. I'm sticking my neck out to say rates will go up by 0.75. That means housing prices are stable. Everything in America seems to be stable. There is still not enough workers and still the labor market is very tight. That's what they are saying. All this indicates sticky
inflation hasn't gone away. If anything, it's all there.
Yeah. Core inflation is at 4.7. Target is 2. You cannot be being, you cannot remain stable. You cannot think
No.
it's coming down. So what will happen is, if the reading is bad in August, they have one more reading. In September, they will have a reading. In October itself, they will rise. And whether they will skip in December, I do not know. But if they stick to their plan and skip in October and rise in December, it is going to be extremely difficult. And so America's interest rates are not coming down any soon.
No.
What does that mean for India and other countries? Startups are not going to find any money in the next 18 months.
No.
Right? So Dunzo is already bleeding, and Reliance is just waiting to buy it cheap.
Yes.
Right? Very cheap valuations, because Reliance is 40% of its customer. Byju's is down and out for the count. It's going to sink. Anybody who does not have capital is going to sink, and there is going to be a lot of job losses. Today I read somewhere a major newspaper in India, India's largest newspaper, in its internet division has sacked 100 people. So you're going to get a lot more job losses, especially in sectors where it matters. Like SoftBank itself needs money. It cannot put more money into Ola.
No.
Ola Cabs has made a loss of 3,800 crores. Ola Scooters is not selling, let alone make profits. So Ola is in trouble. Swiggy is in trouble. All the companies which require capital are going to be in trouble. And this means that the American market is not going to run away. The market is sloshing with liquidity, because while the Fed is tightening, it's not taking the punch bowl out of the table. So it's still keeping money liquid.
It's more like telling from the kitchen, telling the waiter, go remove the punch bowl. The waiter is still yet to reach the punch bowl.
Yeah, and they are not tightening that.
Yes.
And that is the reason why the sloshing liquidity. So basically the market at the best cases will go sideways, and at the worst case may drop. Time to be defensive.
Yes.
Thank you for watching Be Rich. If you like the content, hit the like button, subscribe to my channel, press the bell notification, and write your comments. If you have done all of the above, talk to your friends and relatives, and then ask them to take a look. Once again, I thank you for your support for Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.